In today's video, we're going to discuss what business makes a lot of money. And yes, I seem to have a channel called Dr. Hedge Fund, but there's a lot behind that. I don't just talk about hedge funds, but I talk about all types of investments. And if you have an interest in making a lot of money, this is the video for you. Before we continue the video, please remember to do thumbs up. It's right there, press the button, and also subscribe to my channel. If you subscribe to my channel, that will really help me out. You're going to get my future videos anyway because you clicked on this video. But if you subscribe, it will really help me out. The career and the industry that makes the most amount of money is the hedge fund industry. And the reason behind that is how they make money. I tried to look through history, and throughout history, the most profitable business that there has been since the beginning of time is trade. People who trade grains back then, thousands of years ago, and for other possible types of grains, they always made money. Because if you buy something low and you sell it higher, the spread is your profit. And so then you speed it up to today and you have the stock market or you have the real estate market. However, the real estate market doesn't always do so well. It depends on the government's initiative. And so as we know, and as I mentioned in many videos, the real estate sector has come to an end. There's a new cycle that's going to happen now. Whereas in finance, the stock market is like a revolving door, in and out. There's so much money that's being invested in the equities market. It could be globally as well, not just the US markets. And so when you look for an investment, you have to think about what type of investment do a lot of people want that is so highly desirable. Well, as we've seen cryptocurrency increase, and it became very desirable, we've seen Bitcoin go up to what was it, 50,000 at one point? Well, that became a very desirable market. But what happens is, after it goes up, it collapses and it goes right down like a stock market crash. So cryptocurrency, it needs regulation. It's too new. So when you're an investor, you cannot look at an investment that's too new. So cryptocurrency was too new. Whereas the equities market, the commodities market, that's an old market. It's been around for so long. And the companies come and go, but yet the market's still there. So a very important time period was during the Napoleon Bonaparte Wars. When he was defeated in Waterloo in Belgium, the English aristocrats had sent their page boys, or whatever they were called back then, to spy on who was winning the war. And they were betting on the stock or the London exchanges for currency, for everything. Who knew the news before everyone else knew? They really made money. So you have to say to yourself, trade is never going away. And for you to have a career that's going to last a lifetime, depends what career you work in, but in finance, people don't last 20 years, 30 years at the same bank. It doesn't happen. Not even at the same hedge funds do you last 20 years. I'm sure many people have, but many people haven't. So, and of course, what changed that is the government initiative in the late 70s when all our factories went out of business. Not all of them, but a huge amount. People were losing their pensions because the company went broke. So the government changed the law that stated that we have to hold our own pension and we get to invest it. And that's the rise of the investment bank era. So Again, when you realize, well, you also have to make money in your lifetime. You also have to know how to invest it. Well, the most lucrative investment there is the stock market, the equities market. And then you have to say to yourself, if you want to make a lot of money, what industry should you be in? Well, if you're young and vibrant, you should study trading. You should study everything there is to trading. Unfortunately, in college, it's not going to be so specialized. Maybe some colleges have created a business program for trading and for quantitative analysis. I don't know. But even my PhD was a financial management and leadership PhD, and my research was a quantitative analysis about hedge fund selection and risk management. So I didn't take courses on that because I took so many courses already. I had to create my own research and my education. And that's what a PhD does. So, but for you to waste all that time, 15 years in school, it's kind of a waste of time if you know already you want to become, let's say, a trader, because that's where the money is. And if you study trading, you could learn a strategy out of a textbook. For example, Ken Griffin, he was in his college dorm room at Harvard, and he stumbled upon a trading strategy. And he started to study it and practice it, and then all of a sudden he started making money. And he started to raise capital. And of course, he grew the company over, 30 years, 20 years? Do you really need to get a PhD? No. You need to have a passion. I know what my passion is. And my passion is selecting and deselecting hedge funds for a portfolio. I breathe it, I see it, I feel it. And you also have to have some intuition. A lot of cops and detectives have intuition. And this is very important because you could see the strategy, but you have to have a human mind whether or not you're going to get into that trade or not. And so if I could give you any advice, you should start trading and learning how to trade in your teenage era, 10 years old, 7 years old. If you could add and count and use a computer, then you could learn a trading strategy. I studied options for my PhD research. I had to create a theory on risk management. So since options was a cheaper methodology to, it was cheaper to use the options method, I had to study options methods. And what did I use? I used a credit spread strategy. I highly recommend, if you want to trade, learn that strategy and do it on the options market. You don't need real capital. Just use a fake account. It's called paper trade. It's a simulated account. It's the same thing. It may be off a little bit when you actually go live, but still you'll learn the methodology. And focus on studying an exit strategy. When the trade goes bad, you need to really study that strategy and what you're going to do. And if you could conquer that and perfect a strategy over and over of getting in and getting out properly based on what you write down, you will become successful. Of course, you need self-confidence. You need your subconscious to believe in yourself. And you need to feel it and breathe it. So that's my advice. Financial trading will always be the most lucrative industry. You don't need to wait until you get a job. The investment bank isn't going to teach you everything. Unfortunately, you may not last there if you're not good enough within that 2-year period. And what if it takes you 5 years to really learn it? Exactly, you're going to give up. So you're better off starting to trade on your own. A funds of funds is a better investment for clients, number one, because clients are very ignorant, so to speak, on really investing money, even if they work for the asset allocation team at the investment bank or the endowment or whoever they are. They really don't have a clue on how to select a hedge fund or really how to select any type of investment. Because I get the same questions: where did you go to school? What's your experience? Really? Again, those are very elementary questions that doesn't guarantee that someone is going to be successful or not because they went to Harvard. Or if they went to Long Island University and not going to be successful, they're going to be successful. That makes no difference. And it doesn't matter if they worked for an investment bank for 10 years. You have to think to yourself, why were they wasting 10 years at the investment bank when they could have started their own company? So these entrepreneurs, they started immediately when they feel they're ready. Ray Dalio, after 2 years of college, he tried to work somewhere, but that wasn't going to work, so he opened his own company. Ken Griffin, in his college dorm. And many, many other successful people. Look at Sam Bankman-Fried. He only had 2 years experience. And he started Alameda Research. So whether or not you actually believe that it's hard to raise capital, according to Sam Bankman-Fried and what his success was, it is very easy to raise capital now that I'm seeing. And it's not just being connected to the right people, it's being a good salesperson. And so you also have to study sales and how to sell your concept. Mark Cuban said it's easy to sell an investment or a product, but it's very hard to keep the wealth. And he was right. It's easy to make $1 billion, but it's really hard to keep it. But if you're studying investments like trading, eventually you'll realize, well, once you're a trader, you have to diversify your own assets because you can actually lose half your portfolio in a year. So that's where the funds of funds comes in. Because the funds of funds is the future of our markets. The investment banks are gone. That's not the focus. That's not the top anymore. Remember how society changes? The 1970s, it was a change. It got rid of the savings and loans, and they became the investment banks, and they started to get bigger and bigger. Then they collapsed, and the total capital was dispersed between different hedge funds. And so now it's the hedge fund era that's becoming. We have a long time to go to see the next cycle, but the cycle is the funds of funds, that next cycle. And so you're going to see thousands and thousands of funds spring up. But you also need traders to trade in hedge funds. So you need thousands and thousands of more hedge funds to trade the capital. That's why if you like making money, and if you have made money in cryptocurrency, well, you could do the equities market. You could study you could study what you need to know in the equities market. Remember, cryptocurrency is not as big as the equities market. And when I say big, we're not talking about total wealth of a market. No. We're talking about assets. You have thousands of indices out there, thousands of companies that go public. And that's what makes the equities market so valuable, because it has that depth that you need to have a buyer and a seller on every trade, to have people that come in and leave, and it continues over and over. The cryptocurrency market is not there yet. When the Bitcoin starts to drop, people sell, and it's like a stock market collapse. It's actually worse than a stock market collapse, because the stock market doesn't go up that high. And so that's why if you want to make money and you got a taste of trading, you need to focus on the equities market. I'm not saying don't trade cryptocurrency. It's going to go through a change. And it's going to take a couple of more years for Bitcoin to be past 60,000. And that's my take today. I hope you really enjoyed my video. Please remember to subscribe to my channel and do thumbs up. It's right there. It doesn't hurt to press that button, but it will really help me out. And subscribe to my channel. You have to do it. Because if you do it, I'll grow my channel more and more and more. Thank you so much. I greatly appreciate this.